Hey everyone, welcome back to Corporate Decoder, the place where I help you understand the fine print. And today we're talking about Assembly Bio's latest move, and let me tell you, it's a big one, a capital infusion that is quite substantial. This is a Form 8K, a current report, telling us about some really important things that just happened with Assembly Biosciences. So what's the big news? Assembly Biosciences just had a major event, a big offering of their stock and some other financial tools. Let's dive straight into the main action. Assembly Bio announced a big underwritten offering. This means they sold a bunch of their stock and included something called warrants with it. Think of warrants as a ticket to buy more stock later at a set price. They sold over 5.5 million shares of their common stock, and get this, they bundled them with warrants. These warrants are for buying even more stock later, but that's not all. They also sold what they call pre-funded warrants. These are a bit special. They let investors buy stock immediately without needing to pay the full price upfront. Right away, it's like a down payment paving the way to own more shares. So you have the regular shares and these pre-funded warrants. The offering was structured to bring in a lot of cash. The price for these shares and their bundled warrants was set at $19.60. This is a pretty significant price point, indicating strong investor confidence, or at least a strong need for capital. This whole deal officially wrapped up on August 11 this year, and the result, approximately $122 million flowed into the company after all the fees and costs. This is a huge amount of money for a biotech company, and they plan to use it for general corporate purposes, which is pretty standard. Now, about those warrants, the ones sold with the regular shares, not the pre-funded ones, they have an exercise price of $21.60. The Class A warrants could be used right away, but they have a couple of conditions for expiring. One is 5 years from when they were issued, so around August 2030. The Class B warrants are a bit more delayed. They can only be used after November 15, 2026, and they expire at the end of that year. But here's a kicker: they automatically disappear if the company announces before November 2026 that they've secured at least $75 million in non-dilutive capital through a collaboration deal. An interesting detail here is about how many shares someone can own through these warrants. You can't exercise them if it would mean you own more than 4.99% of the company's stock. You can ask to change this limit though up to 9.99% or even 19.99% if you already owned a lot of stock beforehand. The pre-funded warrants, however, are a different story. These don't have a set expiration date, which is quite a commitment from the company to those investors. But wait, there's more. Assembly Bio also did a private placement with Gilead Sciences. That's a huge name in the biotech world. They entered into a securities purchase agreement with Gilead for selling in a private deal. This means it wasn't offered to everyone. It was a more exclusive transaction. Through this private placement, Assembly Bio sold another roughly 2.3 million shares of their common stock to Gilead, along with more warrants. This private deal brought in another $45 million for Assembly Bio, again to be used for general corporate purposes. This partnership with Gilead is definitely noteworthy. The warrants from Gilead mirror the terms of the other warrants we talked about, with the same exercise prices and expiration conditions. Gilead also has ownership limits, but their limit is higher at 19.99%, which can even be increased to 29.9% if they choose. This shows Gilead is looking at a significant stake. On August 8th, Assembly Bio also put out a press release announcing the pricing of both the public offering and the private placement. This press release is included as an exhibit, and it basically confirms the details of these significant capital raising events. And finally, we see the signatures confirming authorization for this report, dated August 11, 2025, including John O'Gunderson, VP, General Counsel and Corporate Secretary. So let's break down what all this means for Assembly Biosciences. Firstly, this is a massive financial injection. A total of over $160 million was raised between the public offering and the private placement with Gilead. This kind of money can significantly fuel a biotech company's research development and clinical trials, especially in crucial phases. The strategy here is pretty clear. They need cash and lots of it to advance their pipeline. The warrants, especially those with longer expiration dates, suggest a long-term view on the stock's potential and a desire to secure capital over time. The varying exercise prices and expiration dates on the warrants also hint at different investor expectations and risk appetites. The higher exercise price for the Class A warrants and their potential expiry tied to clinical study enrollment suggests investors are looking for progress in their key projects, like ABI 5366. The deal with Gilead is particularly interesting. Gilead is a titan in the pharmaceutical world. Their investment signals a strong belief in Assembly Bio's technology or its therapeutic candidates. This isn't just about money, it's also about strategic validation and potentially future collaborations or even an acquisition down the line. Gilead's higher ownership limit suggests they might be positioning themselves for a more substantial role. However, there are always risks with such large capital raises and complex warrant structures. For Assembly Bio, the challenge will be deploying this capital effectively and showing tangible progress to justify the investors' faith. The market will be watching their clinical trial results and regulatory milestones very closely. If they don't deliver, the stock price could feel the pressure. Furthermore, the embedded options through warrants mean that if the stock price performs well, the company could issue even more shares upon exercise, which could dilute existing shareholders' value unless the company's growth outpaces this potential dilution. From a Warren Buffett perspective, we'd want to see how efficiently this capital is being used to generate future value. Are the clinical trials progressing well? Is there a clear path to market for their lead candidates? If the money is just going to keep the lights on without substantial clinical or commercial advancement, then it's not a great sign, but if it fuels groundbreaking research that could lead to significant breakthroughs, then it's a wise move. Overall, Assembly Biosciences has secured a substantial financial runway. It shows strong investor confidence, especially from a major player like Gilead. The key now is execution. Can they translate this influx of cash into meaningful scientific and commercial success? The next year or so will be critical in determining if this strategic capital raise pays off for the company and its shareholders. What's your take on this massive funding round for Assembly Bio? Do you think Gilead's investment is a game changer? Let us know your thoughts in the comments below. If you found this deep dive helpful, please hit that like button and subscribe for more corporate breakdowns. Don't forget to join our Discord community linked in the description for more discussions and analysis. Thanks for watching, and we'll see you in the next one.